Welcome traders to this educational video of Nifty Analysis, episode number 27. Guys, it took a while to make my next Nifty Analysis video because my previous video I had shared with all of you on March 25th. And the reason I took that much time was the market itself took a lot of time to reach my last target. If you remember, on March 25th, I had clearly shared that when market was at 8300 levels, I had shared four levels: 8600, 9000, 9300, and even 9600 levels. And all these four levels were achieved in Nifty spot, right? The last gap up which we saw on 30th April, I think market tested nearby to 9900. Now the first question is, why did suddenly from the next day onwards market has started coming down? What is the main reason? The first reason and the most important reason which I can see is market had already retraced this entire downtrend, all right, which started in the February month, and we had retraced by 50%, and 50% retracement are always an important juncture. Apart from this, we can see the 50-day simple moving average was also trading in the same area, and we had a gap over here. You can see this downside gap. So this entire band, as I've always shared in many of my educational videos, that at times we don't have a level, but we have an entire band where we can say that this entire band is a resistance. So from 10,300 to 9,900 was a very, very important and extremely strong resistance for the market. That is why the next day we can see a bearish belt hold candle, not only a gap down, but the entire day relentless selling pressure we could see in the market. And today what we saw was a small trend line breakdown which has occurred in the Nifty daily chart. And apart from this small breakdown in the trend line, we can also see a trend line breakdown in RSI. Although this trend line breakdown is not very strong in RSI, but we cannot ignore it, right? Now, according to my analysis, what I can see is obviously the overall trend, the major trend in the weekly chart, if you check the weekly chart, is not up. Whatever we have seen till now is just a pullback, all right? No doubts about that. But the million-dollar question is, has the market resumed its original trend, which is on the downside, right? So according to me, the downside momentum has been resumed, but there is a lot of choppiness which could be seen in next few days. The trend could be down, but chances are, if you can see this entire zone, a lot of trading has been taken place. This is a big candlestick cluster. So chances are that we could test possibly a level of around 8950 in the markets, right? 8950 is an important resistance. And once we close below 8900, we could test somewhere around 8680. And why 8950 is an important resistance? I'll go back to the weekly charts. If you go to the weekly chart also, what I can see is, you can see the high of this particular candle is coexisting with lows of these two candles. So possibly this particular level 8950 is a very strong support, and the current trend in the market is obviously down. If this downside momentum continues in the short term, we could test 8950 and possibly somewhere around 8680. So trade very, very wisely. The volatility overall is still high, and still I think it's a long way by the time the volatility will come down. All right. So trade wisely, stay safe, and stay indoors. Thank you.